Hey friends, in this year, 2024, significant changes are expected in Turkey's financial landscape, impacting everything from daily expenses to international investments. Here's a breakdown of what to anticipate. Financial revaluation and increased taxes. At the onset of 2024, a revaluation process will trigger a surge in prices across the board. Should President Erdogan choose not to intervene, taxes and fees are slated to rise by a substantial 58.5%. The Turkish Statistical Institute has calculated the revaluation rate, RRR, at 58.46%. Unless President Erdogan exercises his authority to adjust the YDO, yearly dynamic optimizer, by 50%, fixed taxes, fees, and penalties will see an unwavering increase of 58.46%. Projections in the 2024 budget. The 2024 budget bill presented to the Turkish Grand National Assembly suggests a sweeping increase of over 70% in revenues from various taxes and fees. The government is poised to implement new tariffs, effective January 1, 2024, leading to higher traffic fines, including a substantial jump from 951 lira to 1,507 lira for certain violations. Motor vehicle tax, collected twice this year, is also set to surge by a minimum of 58.46% in the coming year. Passport and international fees. Changes in passport fees and international telephone registration fees were enacted in July. These adjustments will result in a rise to 2,397 lira for one-year passports and a significant increase to 7,836 lira for passports valid for 3 years and above, effective at the beginning of the year. Additionally, those bringing phones from abroad will face a registration fee of 31,700 TL at the start of 2024. Identified areas of increase in 2024, taxes, fees, and penalties subject to a 58.46% YDO include real estate tax, environmental cleaning tax, motor vehicles tax, inheritance and transfer tax, stamp tax, special communication tax, traffic fines, driver's license, passport fees, judicial and notary fees, vehicle inspection fees, penalties in tax laws, and the amounts in income tax slices and tariffs. Foreign investment landscape. Despite efforts after the election, foreign funds remain cautious about entering Turkey due to uncertainties in interest rates, exchange rates, and inflation. Large funds, including Amundi, with assets of $2 trillion, are closely monitoring TL bonds. Foreign expectations include a substantial increase in interest rates, currency depreciation, and policy continuity for TL bonds to become attractive again. Demands from foreign fund managers. Notwithstanding consecutive interest rate hikes, foreign funds such as Amundi and Itaú are urging further increases of 5 to 10 points to align with inflation expectations. There is a consensus that TL bonds can shine in 2024 if interest rates are maintained above 40%. TL stabilizes, and policy continuity prevails. Concerns and outlook. Foreigners remain cautious due to restrictions on the foreign swap market and concerns about the upcoming local elections in March 2024. A wait-and-see approach is adopted by investors, emphasizing the need for Erdogan's administration to address various economic challenges. In summary, 2024 brings a significant financial shift in Turkey, impacting citizens through increased taxes and fees, while foreign funds closely scrutinize the economic landscape for potential investments.